Hey, what's going on, guys? What's going on? I hope you guys are having a wonderful day. I want to say welcome to Dr. Boyce Daily Stock Market. My name is Dr. Boyce Watkins, and if you don't follow Dr. Boyce Daily Stock Market on Spotify, just look up Dr. Boyce Daily Stock Market, and you'll find this podcast on Spotify. I hope everybody's doing well. And this morning we did our financial consciousness economic elevation training, which we also call Money in the Morning, and that is a free class from the Black Business School that I offer every single day, 7 days a week for anybody that wants to learn. This morning we had 1,000 people in there that were learning, and we talked about the beef between Kendrick Lamar and Drake and how that and the economic implications of rap beefs. And so it sounds unconventional, but it was a lot of fun, and we all learned a lot. Now, good morning, Derek, Talley, and Duran. I'd like for you guys to help me out real quick. El Haj, can y'all give me a quick yes in the chat if you can hear me? Let me know if you can hear me. I'm on a different device, and I just want to make sure Larkita Bird that everyone can hear me okay. And Derek's out of Seattle. And let me tell you, Derek, man, I went to Seattle, bro. And your city is in trouble. Your city's in worse shape than my city, Chicago. And I talked to folks in Seattle, and I remember how much trouble they were having. They were talking about just how much the city's changed since the pandemic, and it just made me sad because I thought the pandemic was handled all wrong. But anyway, okay, thank you so much for giving me the confirmation that you can hear me. I appreciate that. Alfred Kitchen and Brandon Braswell out of Dallas. Good to see everybody. All right, hit the thumbs up button. Please hit the thumbs up button. Thumbs up, share, subscribe. Let me give you a few quick things in terms of what's happening this week in the stock market. I want to just kind of give you a quick update, let you know what's going down, and let you know where some of the opportunities reside, because I want you to be financially conscious and want you to know where the money's at and what's affecting your money, what you have to kind of process. First off, a lot of consumer data is going to be released this week. The Consumer Confidence Index is going to be released. That's going to be released on Tuesday, and it's going to provide insights into consumer sentiment. And sentiment's really important because consumers that are happy, consumers that feel optimistic, consumers that feel confident are the ones that are typically going to end up buying things. And when they buy things, that makes the economy stronger. So we're going to learn how the consumers are feeling right now. There's a big rift right now between how wealthy people view this economy, how the elites view the economy versus how regular people view the economy. The elites keep telling us that the data is good and that the economy is great. But the reality is that for a lot of people, they don't feel that way. And I'd be curious to know what you all think about that, because I think there's a divide. I think it's because of a wealth divide. I think that it's because real wages have barely crept up, and that working class people are not benefiting from this economy as much as investors and stockholders. And that's one of the reasons why I want everybody that listens to me to really consider becoming a stock market investor. It's not hard to do. I'm doing a special training on Tuesday on how to invest in the stock market. You can get in for free if you do a $1 trial in my Black Stock Market Investing program, which is very popular. It's been around for 6 years. It's extremely good, and you can try it out for the first month for $1. And the URL is theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. So feel free to do the dollar trial, and you can get into the Tuesday class. All the materials are yours for life. From that class, from that particular training that I'm going to do on Tuesday. All right. So also, the GDP report is coming out. That's the final estimate for first quarter GDP that's going to be released on Thursday. That's going to tell us what the economic health is right now, where the economy stands, and if the economy is doing well or doing poorly. If the economy is doing well, that could be bad news. If the economy is doing well, that could be bad news for your stocks. And the reason that a good economy could be bad news for your stocks is because it may cause the Federal Reserve to further delay the reduction in interest rates. Basically, reducing interest rates is like putting medicine into the economy. It stimulates the economy, gets the economy going. Well, why would you put medicine into an economy that's not sick? You see what I mean? So basically, if the economic data is good and the Federal Reserve gets the message that the market is strong, they are not going to reduce interest rates, which could cause further delays and just cause even more problems on that front. So keep that in mind. Keep your eye out for that kind of economic data, and what you're going to see is you're going to see massive reactions from the stock market based on what that data tells us. Okay, so ultimately, that's a big deal. That's going to really make a difference, and so just kind of keep that in mind. So as these numbers come out, that's going to come out on Thursday. Now, by the way, I'm sorry to have to do this real quick, but I want to check again. Can y'all still hear me? Give me a yes if you can hear me. Okay. I want to make sure I'm coming through all right. I just hit a couple buttons and I think I might have messed myself up. So let me know if you can hear me. And if I don't get an answer, then I'll know that you can't hear me, which means I messed up again. But y'all got to forgive me. I got to keep checking the audio to make sure that I'm coming through all right. Okay, so thank you, Catherine and James. I appreciate you. All right, so let's keep going here. All right, so Ben Yancey. Another thing that is going to be reported this week is there's going to be a report on Friday that's going to include personal consumption expenditures, what they call the PCE price index. And that's the Fed's preferred measure of inflation. So you're getting a double whammy this week in terms of economic data. You're getting the GDP report, which tells us how strong the economy is doing. Then you're going to get the PCE report, which tells you how strong inflation is. Basically, inflation is the most important thing that they're monitoring, but they're also monitoring inflation as it connects to economic growth. So here's something that would cause them to jump into immediate action. If they find out that inflation is low and economic growth is also low, then there's a good chance they may go ahead and accelerate the decision to reduce interest rates because they're going to say, oh gosh, the economy needs medicine and inflation is under control. So let's go at it. What they need to have is they need inflation to be under control before they feel comfortable injecting the economy with medicine, because when they give the economy medicine, it causes inflation to go up. You understand? So the inflation is kind of like the side effect of economic stimulation. When they stimulate the economy, you can have inflation inadvertently happen. This is how they got all this inflation the first time. Can y'all get what I'm saying? I want to make sure everybody understands this point so you'll know kind of what this data means. But basically, they gave the economy too much stimulation during the pandemic because they thought the world was coming to an end, and it wasn't. And that caused an inflationary problem unlike any other. Sure, the economy took off, but you had inflation everywhere. Every prices were going up by 8-10% and all this other stuff. So long story short, it was one of those things where it just became a complete shit show. So to avoid the shit show this time, what they're planning to do is, if inflation is under control and if they see the economy isn't that strong, then they might go ahead and reduce interest rates, which ironically can be good for your stocks. What else? Also, the Federal Reserve speakers, Chairman Jerome Powell, he's going to speak this week. His comments get closely watched whenever they are released because he's the boss. He's the guy that kind of runs the economy. I was really surprised this guy does not have a PhD in economics. I found out he was a lawyer. I was really shocked. I said, a lawyer should not be doing this job. This is not a lawyer's job. This is the job of an economist. But he was appointed by President Trump, who's a guy who probably doesn't respect economics and finance PhDs, because he's a businessman, but he's wrong on this. He's 100% wrong because you need an economist in this role because it's such an important and difficult position to be in. So I just really hate the fact that Jerome Powell doesn't, in my opinion, have the credentials to even have this job as chairman of the Fed. That's just, but I got to look it up. I got to double check. I know he's qualified. He's in other areas. He's done a lot of great things in terms of law, but law is not economics, and so I just, like, you wouldn't put me in the courtroom to try somebody's case, even though I have a lot of education. I'm not a trial lawyer. Well, maybe you shouldn't put an attorney at the head of the economy. I don't know. Maybe that's just me talking crazy. All right, what else is going on that you want to pay attention to? Earnings reports are coming out this week for some big companies like Nike and Micron. These results are going to tell us a lot about consumer demand. That's a big deal. Geopolitical tensions in Russia, Ukraine, and also stuff between U.S. and China could move the markets. So pay attention to that. This war with Ukraine. War is just always just bad in general for your bank account. It's just, I the main reason I don't like war is because it just messes up everybody's money. So ultimately, hopefully, these tensions will be resolved. This stuff in the Middle East will somewhat tone down. This Ukraine-Russia situation, if that were to come to an end, that would actually push the market up. So these geopolitical tensions are a big deal. Also, in terms of sectors that are strong right now, that are showing a lot of relative strength, technology and healthcare tend to be pretty powerful right now. Those tend to be areas that you may want to look at. Some of the areas that have what they call headwinds, which is problems, would be areas like energy. If you're looking at it as a short-term trade, now I'm a long-term investor in energy. I'm a long-term investor in things like copper. I've mentioned to you all that COPX, the copper ETF, I'm a consistent investor in the copper ETF because I believe that the demand for copper is going to go up. Also, I mentioned to you all a uranium ETF. It was, gosh, I don't remember I think it was URA. URA was the ticker symbol, the uranium ETF that I invested in. So feel free to take a look at that if you're looking to things that appear to be good long-term investments. Short-term, nobody knows for sure because it's hard to predict these things. But this week, those are the catalysts that will move your portfolio this week. Now, one of the things I talked to you guys about consistently in financial consciousness training, and also for those of you that are in the Prime program, is I tell you, don't overreact. Just because you see things dip a little bit, that either means it's a buying opportunity. It doesn't mean that it's a time to sell and run and all this other stuff, because that'll cause you to lose money. So when it comes to investing, you want to be in touch with your emotions. Like, you got to know what you're afraid of and what risks you're not willing to tolerate. But you also don't want your emotions to cause you to make bad decisions, which I see happen on a regular basis. All right. So anyway, those of you that are in the Prime program, that's where we generate consistent income by selling stock options. Feel free to take a look at the program. It's at drboyceprime.com. We're going to do a meeting on the 25th. I will send you all a text in the next couple of days to invite you to that class meeting. If you want to get on that text list and just see what we're doing in Prime, text the word options to 87948. If you text options to 87948, you'll get a link, an invitation to join us in class. And you got to be a member to come in, though, just to be honest with you. But it's a great program. We have money back guarantees in the Black Business School. We're not here to do, we're not, this whole internet culture of people getting scammed and all this other stuff. I don't agree with any of it. I think it's a problem. So the truth is, I'm not a financial influencer. I'm a financial scientist. So everything that we do in the Prime program is based on economic science. So if you've ever had an interest in stock options, I can tell you this is how I make the bulk of my money. And I don't make money on the buy side. I make a lot of my money on the sell side. So if you want to dig into this, feel free to go to drboyceprime.com. This is something that I'm passionate about. I've been doing this for 30 years. I taught finance at Syracuse University, stuff like that, and so everything I teach you will be based on the fundamentals of the economic science, and also it's designed to minimize your risk. So these are great ways to, in a very low risk scenario, not risk free, but low risk scenario, make money in ways that thousands of people have been doing for a very long time. So feel free to join us at drboyceprime.com. Okay, guys. I'm about to get out of here, and I hope you guys have a great day. And please hit that thumbs up button, thumbs up, share, subscribe, and I will see you soon. And I'll talk to you guys later. And don't forget, this podcast, Dr. Boyce Daily Stock Market, is actually on Spotify. So if you look up Dr. Boyce Daily Stock Market on Spotify, you can find it there as well. So have a good day, everybody. I'll see you soon. Bye bye.